Patrick Star, we need to talk.
Just one more minute. I got
Don't
it.
one more minute me, Mr. Man.
Hey, I'm missing the coconut.
You haven't been helping at all with Junior. We made a commitment and you're not doing your share. You never do anything.
I changed his diaper.
Yeah, once.
He's only this big. How many diapers could he possibly use?
Hmm?
Oh, that's not so much.
Hmm?
So?
Hmm?
All right, welcome back, traders. I hope you all had a happy new year and a Merry Christmas for that matter. I haven't spoken to anybody in over 3 weeks, I think was the last video I made. I apologize to TradingView viewers that you couldn't hear the volume on that. That's just the way the audio is set up on the browser. It will only capture one mic, so apologies, but the rest of you should have got the point on that. Looks like our old friend Jay Powell is continuing to tackle this inflation problem. All right, looks like inflation rates are coming down hard. We've hit a top. We've rounded that corner and are coming down hard. But Jay Powell is still dead set on negotiating these interest rates. Just making sure my camera's on because the camera is off. I can't see myself. But looks like it is recording me as well. All right, so I just thought I'd stop by here and just update you on our market situation. Really, a couple reasons why I haven't made a video. Nothing exciting is going on. Everything is going as predicted. We're just kind of doing sideways movement in the crypto market, at least. The dollar's doing as expected, and the VIX as well. For that matter, everything is really doing as expected. And our old friend Jay Powell is continuing to talk of interest rate increases. We'll see how that plays out in February. Let's get started with today's video. I know my TradingView people only have 20 minutes on this video before you guys get bumped, and the rest of you, I can direct you TradingView people, viewers, over to YouTube, or just go to my Studamus channel. Let me just put my social media thing up here again for you. There we go. Any of those sites, or just head over to my website at studamus.com, studamus.us. Either one of those will get you there. Okay, I'm just making sure the video is still working. Thought I froze there for a second. Let's take a look at some of these charts. Guys, I haven't looked at these, quite honestly. I'm, just kind of hodling on for dear life with my few cryptos that I have remaining. Now, I won't make it sound worse than it is. I have high interest yielding APY cryptos that are earning me very good interest, so the losses are not as hard to swallow as some of those who may be holding cryptos that don't earn interest. And so for the down movement that has happened in my cryptos, the upward movement of interest-bearing yields is helping to kind of zero out those losses. So I've kind of remained sideways for the most part for the last, 4 or 5 months, and I expect that's the way it's going to go for a little bit longer. Let's talk about that. So here I have the dollar chart pulled up, and I think I drew these arrows, this head and shoulders pattern here, maybe the video before last, over a month ago. I know it was probably 4 or 5 weeks ago, and we have played this head and shoulders pattern out as expected. We came down, tested the top of our trend line here, came back up, kissed our neckline as expected. Then I drew a red arrow at that point. I think this is where we were the last time I created a video, just right in here somewhere. And I said, well, I think we're going to continue down. And this is the area of confluence that I saw we could hit. Now, we still could hit that, but it's looking like our 103, or is that 104? Yeah, 103 trend line, horizontal trend line is holding our price action on the dollar right now. I still do believe that the dollar will continue to make its way down. In fact, the area that I'm calling for eventually is way down here. See all this red down here? That is where I think eventually we go on the dollar. Now that will be way off in the future. Sometime this year is where I think we will hit that. But I do think that the dollar will continue to lose value. Now, if I am correct in that, I guess, assumption or prediction, that does mean that Jay Powell and company are going to have to, at the very least, greatly slow down the increase of their rate hikes. Okay, so last time we had, first three we had 75 basis points, or first four, I can't remember now. Then last time we had 50 basis points. Now coming up in February is when another rate hike will be determined. I expect that to be at least 50 basis points. I think that's what the market is probably pricing in as well. If it turns out to be anything less than 50 basis points, that's when the market will start to take off. I am still expecting a blow off top. Nothing has changed about that. Let's just jump over to our US 500 chart here and see where we're at. All right, again, I drew this W pattern out several months ago. And even though it's ugly, we are following this trajectory. Now we have major overhead resistance here with the 200-day, actually even with the, what is that, the 100-day moving average? Yeah, 100-day moving average is the purple. And we have the 50-day overhead as well. Actually, all three 50-day, 100-day, and 200-day moving averages are overhead. Also, see this black descending trend line? That's going to be huge resistance for us to break through. And this ascending black trend line, that will also provide resistance. So the only way we can break through all those resistance points, all that, I mean, it's really not an area of confluence technically. They have to be combined. This right here would be an area of confluence. Intersecting major resistance points is what I would classify as an area of confluence. But, long term, on a long-term trajectory, you could consider all of this as traffic or obstacles we got to get through. And that would be a longer term area of confluence. I guess you could look at it that way, maybe. Either way, it's a lot of resistance we got to get through, and the only way we can get through that is if the dollar does continue what I think it will continue to do, which is weaken. Now, I'm not saying that we won't go sideways here for quite some time. If we continue get these 50 basis points rate hike, then I imagine we probably will stay over that 103 level. The only way we would break down those three levels there, 103, 102, and 102.2 is, and also this stuff here, is if, Jay Powell surprises us and goes a little bit lighter on either the next rate hike or one of the upcoming rate hikes. Now, I just quickly skimmed CNBC to see what the FOMC notes or minutes looked like, and it sounds like Jay Powell is still considering, pretty aggressive rate hikes, and by that I mean at least 50 basis points the next few times. And if that happens, again, I do think that we will continue this sideways trajectory Either we remain above that or we just, kind of float around here before J-Pow, any 25 basis point rate hike in the future could potentially break this area of support, and that would take us down to our, this whole area down here, which is providing good support, and that's where I expect us to go. That's where the head and shoulders pattern is showing us we will go. If I measure out from the top of the head as we do to the neckline, and then take that from our neckline break, that's taken us right down here to this whole area of support. All right, so that is where I see us going eventually. Now again, this is a longer term time frame I'm looking at, all the way through 2024. All right, let's also see what the VIX is doing. Haven't looked at this either. Okay, so we broke below that megaphone pattern. That's a good sign because that was a hugely bullish pattern. All right, and what happens is you tend to bounce around in that megaphone pattern, going up and down. The next leg up would have been massive and would have called for some kind of cataclysmic or geopolitical event, negative event taking place. Of course, we know that the war between Russia, Ukraine, or should I say Russia and the rest of the world, is still going on. And that's not a good thing, but we haven't had much news, much very, very negative news. We've had some negative news that has caused us to spike in fear. So that's a good thing. And again, the dollar continuing its sideways trajectory would correlate with what I see here, which is our 21 level of support. So I could just see us going sideways for quite some time. Again, this is looking 3, 4, even up to 6 to 8 months into the future. All of this next year. All right. Could be a pretty boring year if what I'm seeing plays out. If we get a surprise from J-Pow and he decides to be less hawkish, a little bit more dovish, if he sees what I see and a lot of us who are studying this macroeconomy more intensely, I imagine he does see it already, but the Fed is reactive. It just wants to do what makes the majority of investors happy. And the majority doesn't always see into the future as intensely as some of us who study the market better. And what am I talking about? I'm talking about the fact that the housing market has turned over. Let me see here if I can pull use the U.S. housing market. Is this it? Okay, yes. So this is not my full chart in which I had the Dow plotted as well as the Fed rates. I could put that up here, but I won't at this time. Basically, the point of this chart was showing us that last time we drew below this weakening demand zone in the housing market, we entered a recession. And it was not for a full 14 months after the housing demand fell below the weak zone that the Fed finally eased rates. All right, so the Fed paused, actually. If the Fed rate was up here, the Fed kind of paused 2 months after, and then we just went sideways. It did nothing. Finally, 14 months after, it started to ease rates, and then the rates came down. Now, if that historical reaction takes place again with the Fed, then we've got a ways to go. We've really got a full year, like I've been saying here, all of 2023. But what happened in the meantime? All right, in the meantime, so if I had the Dow price action pulled up here, it was somewhere around here, and it did not top until 17 months after we crossed below this weakening demand in the housing market. So 17 months later, the Dow Jones Industrial Average topped. All right. You can go back in my profile here. I could just do that right now, but it's going to take up some time. I don't want to, go to my Studamus profile on TradingView, and you can see this chart plotted. I'm just going to right click here and open in a new tab real quick so you can see where that chart is. If you pull up that profile, eventually when it loads, you'll see that I have that chart plotted there. Anyways, the point of this is that I still believe this historical pattern will play out again this year. So we won't get that blow off top until if it follows last time, a full 18 months after we crossed this trajectory. When did we cross this weakening demand zone? That was when I made the chart. Actually, I made the chart a little bit later than this, but that was in September. All right. So September, October, November, December, and then all of 2023 would take us to 15 months only. So it won't be till 2024 till we really get that blow off top that I have been talking about. All right, let me just jump over here. And if you scroll down here, you'll see, yeah, here's my chart. And then you can pull that up and you can see, I'll just do it real quickly. So you can see, I don't know why my internet is so slow, but you can see the orange is where I've got the Fed rates plotted, and the blue is the Dow Jones Industrial price action. And so just take a look at that, study that a little bit. That's the chart really that I am paying closest attention to, because I think that's the one that matters. Again, this all correlates with the idea that the Fed is purely reactive. It's not necessarily even trying to solve any problem. It's just trying to make investors or Wall Street happy, and much like politicians doing. It's a political job for economics. All right, that's kind of the way that I look at it. Another chart, or some charts we might as well just take a quick peek at. This is the monthly for the U.S. 10-year yield. And you can see that we are in the process of rolling over as expected. All right. So again, a little bit of a bear flag right there. All right. And then we'll come down. We'll break this 100-day moving average. And I say we will because that's how confident I am in this price trajectory. And of course, with the 10-year yield coming down and the 2-year yield also coming down, that does indicate that a lessening rate hikes in the future, and possibly even a pause. All right. And so we've seen the 2-year roll over along with the 10-year. We've seen the dollar roll over, and I think we're going to start to see some decreased aggression by Jay Powell and company. All right, so my time here with TradingView viewers is coming to a close. I'm going to bid farewell to you unless you want to jump over to my channel, studom.us or studamus.com, or any of these social media channels. You can catch my video there and you can watch the rest of it. Basically, what I'm going to cover in the rest of it is I want to look at the logarithmic patterns on Bitcoin. Maybe we'll jump into the Bitcoin dominance chart a little bit, take a look at that. I want to look at Solana, where I think it's going. A lot of people are growing excited with the Solana. Don't get too excited too quickly, because I think it's still going to $5. And Bitcoin could definitely still go to $10,000. So we'll talk about that. Those of you trading viewers that want to view the rest of this video. Okay, I'm just going to go ahead and stop TradingView, and I got to pause this real quick. I've got to bear with me, guys. Sorry about this. It's just part of streaming to multiple, or recording. Yeah, I'm streaming to multiple channels. What's going on here? It's not what I wanted. Okay, so let's just go ahead and take a look at Bitcoin from a logarithmic standpoint, because I want to show you something here that I think is fairly significant. Let's see what where do I view the time that we've spent on this video? Oh yeah, okay, there we go. It's been a minute, guys. Sorry about all of this. So here's Bitcoin, and I'm going to jump here to the logarithmic view. This is on a daily time frame. I can go weekly to kind of shrink it down, I suppose. And I think that line's pretty much going to stay there. But you can see that blue ascending trend line that has been intact since July of 2017. And this is on a logarithmic time scale and offering very strong support since July of 2017, which is really almost, it's 5.5 years at this point. We have not gone below that, broken below that, and confirmed. I know it shows on the weekly the wick downs, but on a daily, that is not confirmation, because the body of the candle is still above that. And even if we zoomed out to the daily, I think you can see a body broke below that, but the next day a body came and broke back above that. So there was no confirmation on any move down below this trend line. We are still right here. Now, one other indicator I like to add occasionally just to see what's overhead is the Ichimoku. And I have that indicated here by the green cloud overhead. We should probably make that red because that is our overhead resistance. So it's interesting. We have two opposing forces right now that are fighting, that Bitcoin is fighting against. We're using this logarithmic support line here. Huge, incredible support. But we have quite a bit of resistance overhead. Look at the width. Look at the depth of this Ichimoku cloud here. That is a lot of resistance to break through. And we have the 50-day, 100-day, 200-day overhead. And honestly, I could probably, let me get rid of Ichimoku now. You get the point. I could see that we have some kind of a trend line going down as well. So almost like a triangle there. So guys, this next week, I really do expect is going to be a big turning point for Bitcoin. I mean, not turning point, but it's going to tell us where we're going. Are we going? We can't continue this sideways price action much longer. So if I jump over here to my other Bitcoin chart, take us out of logarithmic mode. That's not really the chart I wanted here. This chart here. You can see, I put this out 3 or 4 weeks ago, and you can see I expected that we would just continue sideways between these two levels of support and resistance. 15,744 as our support and 17,437 as our resistance. And in fact, we have maintained straight in the middle of that price action. We have just gone straight sideways. All right, but now our logarithmic chart is telling us that this is not going to continue. Jump back down here to the logarithmic chart, put us in log mode, and you can see we're squeezed right here between a descending trend line and an ascending trend line. The ascending trend line is stronger because it's been intact since July 2017. But again, as I showed you previously, This descending trend line is nothing to be fooled with, especially in a bear market. Additionally, we have the 50-day, 100-day, 200-day overhead, and the depth of that Ichimoku cloud, however you say that indicator, is nothing to take lightly. All right, Solana, I wanted to look at that logarithmically as well. So here we have our log chart, and I want to show you something. This is a bearish pattern that we are in. See this descending sort of, I don't know what you call it, descending megaphone pattern. We're right in the middle, and we're hitting a 100-day moving average. All right, so another thing that I saw somewhere along the way, where did I see? Okay, if I take us out of log mode, maybe that's where. Okay, yeah. All right. So taking us out of log mode, see this descending. That's not it. It was a different chart. Anyways, we had a descending trend line. We just broke above. That is why we have, we can use this. It's not really accurate. But that is why we have that up price movement. We just broke out of this triangle. And so we broke up and into the 50-day moving average. Now, what happens, guys, when we break out of these triangles? We like to always come back down and kiss mama goodbye, right? We like to do a retest of that previous resistance, now support, to see if it actually is going to hold us before we continue further up. And so I do expect that we will do that. Now, where is this red trend line coming from? All right, that again was drawn on the logarithmic chart. If I zoom out here, that comes all the way back from August of 2020. August of 2020, you can see it there, and that's $4.18. So we haven't touched the bottom of this megaphone pattern yet. Again, and I expect we will. So from here, I could see us really coming down, taking us out of the log mode again. That would correlate with what I'm seeing here on this non-logarithmic chart, that we proceed up. We hit our heads here on that 50-day. That provides enough resistance, or maybe this 100-day provides us the resistance. And then we come back down, retest the top side of that previous resistance, now support, along with this support level of 418, a good area of confluence, and that's where we begin to build back again. But I do see that it is quite possible we could come down to that level before ascending again. And Bitcoin, I mentioned 10,000. Again, we would have to break below this trend line, which hasn't been done for 5.5 years. But should it take place, and we have some negative news again, and that is, this news with Winklevoss twins and their Gemini going after the Genesis exchange. If you don't know the news on that, Google that. Could turn out to be negative for Bitcoin, and it could take us even lower on the Bitcoin chart. All right, I'm going to pull up this chart here because that gives us more detail, take us out of log mode. And if I get rid of all of this extra stuff here, actually don't even have to do that. Basically, guys, we had somewhat of a, remember this head and shoulders pattern? I drew this as a head and shoulders pattern. I know some people didn't think it was. Turns out it's looking like it was. But that takes us all the way down to I think it was 14,000, 13,000, something like that. Would make sense because we would touch the top of this descending wedge once again. Let's see. One more thing before I leave you guys, and I'll try to put out a more detailed, or I'll try to get my notes together in the next video, and so I'm not just kind of stumbling around here. I wanted to take a look at the Bitcoin dominance chart. We do have some price activity here. So what's happening, I see it right away, is we have a descending trend line, and we have broken to the top side of that, and that has given Bitcoin dominance a little bit of a boost. Now we're using the 50-day and the 100-day moving average as support, and continuing to use some of these other levels of support. Nothing really surprising here with this price action. Again, I do think we just continue bouncing around between these bottom levels here, all of these levels here, and these top levels here. All right, I don't think we break either below or above any of these, but rather we just move around in between these for the next year, really, all of 2024. That's what I see in the cards, guys, for this next up and coming year. That's the longer term view. Of course, you can continue to make trades. I have not been doing so, and I apologize for that, but I have you all on pause because this is not something that I do full time. I do other work full time and kind of just do this on the side as a hobby. And during these bear markets, I just prefer to take my money off line and put it on put it in hard and soft wallets and earn interest versus trading, because you just cannot predict all of this scammery. Nobody knew Luna would crash when it crashed. I mean, there were a few people that had insight. Again, like there were a few people that had insight on FTX. And somebody probably knows what's going on between Genesis and Gemini as well, and what's going to happen there. But most of us are in the dark regarding those things, and you just have to hope for the best but prepare for the worst. And you do that by taking your money off of exchanges, out of USDT and non-audited stable coins. Really, you can put some in USDC, but I don't even know how much I trust that anymore. Definitely not centralized exchanges. The whole idea of trusting a centralized exchange goes directly against a predominant philosophy of cryptocurrency anyways. So take it off of exchanges, put it on the chain in hard or soft wallets, preferably hard wallets, more secure, and earn your interest during these times, and just hope for the best. And we will continue trading against. Once we get in the bull market, that's where I generally do well and do much better than holding during a bull market. In fact, during the last bull market, I did 16 times better. So that is an indication what we have to look forward to. All right, guys, enough from me. Rambled on here for over 30 minutes. I will put out this video later tonight. In the meantime, I wish you all well, and don't forget, guys, if you find this content enjoyable, which only a few of us nerds can do, give me a like or subscribe or share the video, and it only encourages me to put out more content like this for you. Until the next video, guys, peace, y'all.